trading with strategy, which is one of the most important part of trading too. Let me say most important part of technical analysis. We have million type of what's it called trading strategy. It depends on the one that work for you. And you can as well form your trading strategy. It's not a must that you must follow other traders' strategy. You understand what I'm trying to say? You just have to work on one. If this particular one did not work for you, you move to another one. If this particular one did not work for you, you move to another one. And let me see, you reach a certain strategy that work for you. At least use it for 1 or 2 or 3 months. Or let me see, weeks, 1, 2 or 3 weeks. If you see that, yeah, let me see, after a particular time, let's say for example, you want to test the strategy for 1 month. What you just need to do is you keep using that strategy, you keep on using it. Let me see, every day you use the strategy. Then at the end of the month, you see if your high, let me see, if your gain if higher than your loss, then you know that that strategy is for you and you keep using it. Because normally, what is on our aim in trading? Our aim in trading is to make profit, right? That means if our profit is higher than our loss, because normally in any trade you need to lose. It's something constant. You can't be winning every day. You can't be winning every day. And that's why I said even in our physical day to day business, which we normally do physically, not online, there is what's it called lose in it. You might buy a particular what's it called bag of rice today at 30,000 naira. Then the market might fall to 20,000 naira. And do you expect if you still want to sell it that time, do you expect people to buy it from you? No, because there are cheaper ones. So you have to take loss and sell it. If you also want to sell it at that particular moment, it might spoil, or you can store it for the next season. If you're that person that's like holding, that's what we call holding in cryptocurrency. If you buy a particular stock and the prices fall and you don't want to sell at that moment, you can hold. Let me say in future, if the price move up, you can sell. That's what I'm trying to say. So back to our topic, which is trading strategy. You use it for good 1 month. If your profit is higher than your loss, you can now say, okay, this is my trading strategy. I want to be using it. And if you keep using it, let me say, but for a particular month, and you see that no, this trading strategy is not going on again because patterns do change from time to time. You know what I'm trying to say? Patterns do change from time to time. You see that, yeah, from this particular month, I did not make profit, and rather I lose a lot. That's okay. Let me change strategy and use another one again. Let's see how it goes. From the experience you are having, you form another one, form another trading strategy. You have different ways of trading. It's not always using this particular strategy. No, we have different one. You can even this strategy we are going to be teaching is people that form it, not computers. It's people that form it from their experience. They see that they use it from several years or some several months and it work out. So they now bring it out for people to also let me say engage in it and see how it works. That's what I'm trying to say. Don't let me say message me and say which trading strategy do I use. No, it's not possible. I can only give you several different strategies. Check on the one that works out for you. Then pick the one that you know, yeah, this is the best and this is the easiest one. And it depends. All these trading strategies depends if you are a day trader. If you are, let me say, that's what we call minute traders that trade within minutes. There's some scalpers that do trade within seconds. There's some people yearly traders and there's some people monthly traders. So it depends on which type of trader you are. If you're a deep trader, there's a particular strategy that will work out for you perfectly. You know what I'm trying to say? And if you are weekly or monthly or yearly, there's a different type of strategy that will work for you. So let's start. Okay. So now we're on our first topic, which is trading strategy. Before we move on, there are some terms we need to know before we learn this trading strategy. They say trading terms you will need to know. That's first we call targets. So if you are my student from the beginning, you should know what target is. Target is just a point hit. That's what I'm trying to say. Target is a point hit. Let me say when let's say for example now, you set your signals, you set your target. Target is that particular point. If it hits, your trade will close and you have already make your it will close automatically. That like you have your limit, you have your target. You are targeting this particular profit from the word target. You see, they say target is what's it called? Take your profit, target price has hit. If it hit that particular place, your trade will automatically close because that's where you set your target. This is what I want, this particular profit I want, and if you hit that particular place, trade should close. That's what I'm trying to say. And that's what we call entry. When you enter a particular trade from the word entry, they say we buy here, enter into a trade. That's a place where we enter a trade. You set it if you hit this particular place, if you reach this particular price, they should enter. they should buy this particular stock for me. That's what we call entry. And stop loss, I've already explained stop loss. Stop loss is a place in which you don't want to lose much, what's it called? Lose much. That's one of the risk management. You know what I'm trying to say? You set it in the sense that if your trade did not go well, immediately if you hit that particular point, it will sell up. Maybe it will just take 10 or 5% of your capital. It's not taking up. And stop loss is very, very important. Don't trade and say you won't use stop loss. Though there's some particular trade I normally enter, but please, if you want, there's some particular trade I normally enter, I don't use stop loss. And I have a reason for that. I know the capital I'm using. I know no matter how it will never eat up my capital and I'll get liquidated. I know why. So if you're not a professional trader, if you don't know what you're doing, always use stop loss. Always use stop loss. Stop loss is very, very important. And don't be greedy if you are trading. I've already explained that. Don't be greedy. Don't be that type. Let me see, if you hit stop loss, you now say, Kai, why do we hit stop loss? Let me say, after hitting stop loss, you now see that the trade now start going your own way. You not enter again. No, you will keep on losing your money. If you hit stop loss, stay away from that trade. Look for another what's it called trade to enter. Because you must start, if you say you want to do event trading and enter a particular trade, you might enter and the trade will start going another way again. You see, you are losing double. So, advisably, if you hit stop loss, just calm down and look for another trade to enter. Sometimes, if I'm trading, if I hit stop loss, let me say for good 4 days, what I normally do is I'll stay away from trade for good 1 week. I know that that week is not for me. If I'll just stay away from it for good 1 week. That's what I'm trying to say. Binance have that feature. Yeah, let me see, if you keep losing that skip, what's it called? Specific things you need to do. Though you say you want to lock up all your capital. If you lock it up for some particular time, no matter how you tell Binance to unlock it, they will not unlock it, because I don't say they should lock it for some let me see, some maybe a particular time you don't want to trade. And that is very important. If you keep losing, and at that time, that if you see capital in your trading, you just want to enter, just use that particular format, just lock up. And you know, if you lock up, there's no way. So if you want to enter no capital, you just have to come down for that period to be up before they release your capital for you to start trading again. That's what I'm trying to say. So that's what we call retest. This retest is when I start explaining, let me say, explaining the trading strategy. That's when you'll understand what I'm trying to say. For now, even if I explain it, you won't understand if you don't see it practically. Okay, if you don't see it practically, you won't understand what I'm trying to say. Then there's what we call ratio. So ratio, let me explain this ratio. Ratio is always, well, let me say, important in trade too. As you can see here, they say their unit of expectation gain to unit of potential loss will be represented as 1:3. Let me explain what they are trying to say. If you are setting your signals, if you are setting your signal, your profit, your target should always be higher than your stop loss. You understand what I'm trying to say? Your target, in which, what do you mean by 1:3 is, if, let me see now, you set your particular signal. You understand what I'm trying to say? If you are losing, you'll be losing one, let me see, out of three. If you are gaining, you'll be gaining three out of one. Oh, let me use another explanation again. Let's see, you set your entering, right? When you set your entering, you set your stop loss and your, what's it called, take profit. Then the way you set your entering should be, if it hits your stop loss, you will lose $2. That's what I'm trying to say. But if it hits your take profit, you earn $6. You see, it's 1:3. You know what I'm trying to say? If you are losing $2, you should be gaining. If it hits your take profit, you should be gaining $3. Or what's it called? $6 times three of the what you are losing. That's how they want you to set your signal. The stop loss should be one. It should three of what you are setting your take profit. You know what I'm trying to say? So these are the terms you need to know in, let me say, this trading strategy. So now let's move on to our first, what's it called, trading strategy, which is this. This, from the picture you see here. Let's explain this, okay? They say in our, let's start from the what we have here. Let's start from what we have here. Okay. They say in the above chart, the price is getting rejected again and again. That's what we call neckline. You know that line you normally draw for your support or resistance or whatever. We normally call it neckline. Neckline. You know what I'm trying to say? That we normally call all those lines we normally draw or something stuff like that. Neckline. Neckline just serves as like a fence. With a particular hit that particular place, or what's it called, it will bounce back. So that's what we call neckline. And as you can see, this is our neckline here. Whenever the price hits it, it normally bounce back. It doesn't allow it to go. You see, this is our neckline. That's what I'm trying to say. So don't take it, let me say, as something big. Don't take it something big, okay? It's simple. You see, in the above chart, the price is getting rejected again and again by touching the neckline. Okay? They say in this type of pattern, if you take bullish trade, and by now you already know what is bullish trade. If they are talking about you take a bullish trade, they are talking about which you long it. Bullish trade is always making the market to pump up. And if you are talking about longing, we only what do you call expect profit if the price is going up. So what they ask us to do, they say we should always take bullish trade only. You see, they specify, they don't say we should take what's it called, we should take bearish trade, we should take bullish trade only. And we will take the trade only when the price break the neckline and take a retest. You see, that's where the test come in. What they say from the beginning, they say we should take a bullish trade. That's number one. That's why I said if you are what's it called, you can find a pen and start noting it. These are the key points. Number one, they say we should take a bullish trade. That's number one. And number two, they say we should enter a particular trade when what's it called? The price break out the neckline. This is our neckline. Let me explain now. You see, this is our neckline. You understand what I'm trying to say? And the price keep hitting and bouncing back. So what they actually tell us is for us to enter this particular trade, we have to wait for it because I've already drawn your neckline. You have already drawn it, your neckline. So you should enter this particular trade if the price break out. You see, it breaks out because it breaks out. It's just like breaking of fence. If the price breaks out that particular neckline, and it doesn't stop there. They don't say if it breaks out, what is it called? Break out our neckline. We should enter. Oh no, they ask us to wait for a test. Let me draw something here now. Let me draw something here now. This is our neckline here, as you can see it here. Okay, so now let's see the price of something start coming like this. It keep hitting our neckline. It keep hitting our neckline. Keep hitting. That's what I'm trying to say. So they now ask us to enter when it breaks out our neckline. You see, it breaks out our neckline. And it not say whenever it breaks out our neckline, we should enter. No, we should wait for a retest. A retest means, sometimes if a trade breaks out our neckline, it start coming down again. You know what I'm trying to say? So this coming down that what's it called comes down, you have to wait for it. Is it going to break through this neckline down again? Or when it touch this neckline, it will start coming up again. You know what I'm trying, do you understand the explanation I'm trying to make? So you have to wait for a retest. This coming down that it comes down small for it to start moving up again is what we call a test. It's just like a key level, a bouncing up level. You understand what I'm trying to say? It's just like you see, it comes up, then come like it just do like it wants what's it called breaks out this neckline and start coming down again. Then from it start coming up again. It has retest the previous neckline. You understand what I'm trying to say? So what they ask us to do, they ask us to enter only bullish trade. Wait for it to break out this neckline, and if it breaks out this neckline, you have to wait for a retest. Because, for example, now you no wait for any retest. Let's say, for example, now you just come down when it breaks out, you no wait for any retest and went and set your entry, waiting for the trade to start moving up. Then, incidentally, when the trade start coming down, it now start coming down. You no wait for any retest. You see, that's why the retest is the confirmation. Wait for it to confirm the test. After the test, say for example, now it comes down. Let's say, for example, now after like this, it come down small. You wait for it, even if it comes down small, you don't need to start entering. You have to wait for it to start going up small again. Then you now set your entry. I hope you understand what I'm trying to say. So that's what they are trying to say. So now let's read. Let's continue. They say sometimes we make this mistake. You see, whenever the price break the neckline, we immediately buy there. You see what I'm trying to say? This is what they are warning you guys. They say sometimes we make the mistake whenever the price break the neckline, we immediately buy there, and our trade fails. You see what I'm trying to say? They have said we don't want to make such mistake. We must wait again whenever the price break the neckline, when the price take a retest and tries to move up with a bullish candle, we now buy. You see, even if the price break the neckline and start coming down, you have to wait for it to start having something like bouncing from the neckline, start coming up again, like small, making, let me say, 1 to 2 or 3 candlestick. You now put a buy, what's it called, entering in that place, moving, taking a what's it called, bullish movement. That's when you buy. You see, this is the number one trading strategy you need to use. You know what I'm trying to say? This is trading one of the best trading strategies for beginners to use. So there are things you need to, what they call, uh notice in this trading strategy. Just like the explanation I make earlier on candlestick pattern. Like they normally specify what and what you need to see. That's what we call confirmation. I've already explained that this form of confirmation is not only breaking out the neckline. You have to confirm. You have to wait for a retest. And you see one thing about this trading strategy. That's why the first, or is it called, the first topic is fear of missing out. Fear of missing out is very, very important. There are some people now, when it breaks down, they can't even wait for it to retest because they don't want to miss out. They think that if it breaks out, it won't do any retest, it will keep going up. They will say, guys, whenever it breaks out, I won't wait for any retest, I'll just enter. You are doing yourself. That's what we call fear of missing out. And if you keep doing that, or lie assume you keep losing your money. That's what I want to say. You will keep losing your money. Calm down. This trading is time. If you take time and analyze your words, because most people that do technical analysis, they don't wait for the right time to enter. Always, if you miss that particular one, let's say for example now you set your entering, or you wait for it to retest and it did not retest and keep going, go down fine. Go and we have millions of coins to analyze. Analyze another one again. It's not a must that you must enter. Hope you understand what I'm trying to say. It's not a must. That's why I first explain fear of missing. You don't want to miss out, and if you keep doing that, you keep losing your money. That's what I'm like. So wait for the right entry. Wait for it to retest. When it retests, then start moving up small. You set your entry in that place. And if you want to set your stop loss, let me show you how to set your stop loss. If you want to set your stop loss, let me draw a diagram here. Let's see, we have something like this. Then we have something like this, like this, like this, like this. Okay. Then it move up. Then have a small retest. Then start going up. If you want to set your stop loss should be below this. Your stop loss should be below this because normally if it breaks sometimes it might break the neckline and come down like this. Like if it wants to start going down, no, it will not start going up again. So your what you call stop loss. That's why trend are what's it called important to note, okay? And support and resistance are important to know. So if you want to set your stop loss, it will be below all these points here. It will be below all these points here. Because normally if it can break this what's it called here, it will start going down normally because it have already break number one, it breaks the neckline, it break what's it called, the resistance line, and it breaks up onto from there. You know that this particular trade is not what was it called smiling at the moment to start going down. So if you set it in this particular, if it can break all these barriers, definitely it will start going on a down and immediately if you hit your stop loss, it will close. You see, not lose much. Then because if you decide to set it, let me say below something like this on your own, because it will be going on a down. So if you want to set your stop loss, something closer to these lines, these dots here, something closer to that place. So that's it. So let's move on to our second trading strategy. Let's move on. This is our second trading strategy. This particular strategy is called symmetrical continuous triangle. So now let's read it. They say we call this pattern the symmetrical continuous triangle. They say in this type of pattern, we should look for buy opportunities sometimes. You see, they also say we should look for buy opportunities. It's also the same pattern. They say we should look for buy opportunities sometimes. So now let's see their reason. They say this pattern also fail, but whenever we see such a pattern, we have to go for buy. We have to go for the bullish, what's it called? Buy into. You know what I'm trying to say? Then I say now we have to wait for the break of the neckline by forming a neckline in such a pattern when the price break in the previous high. You see, that's why I said input area, what's it called? Knowing the trend are very, very important. If it breaks the previous high, then we can buy. Then even that, we have to wait for a retest. I know that is what you explain. Let me use this picture to explain what they're trying to see. Let me use this picture to explain what they're trying to see. Let me summarize it. This is it. You see, They say this particular pattern is called symmetrical continuous triangle. Symmetrical what? Continuous triangle. If you can see, we have a triangle in this place here like this, something like this. This is how a triangle looks like now. We have a triangle like this. That's what I'm trying to say. So, and we have two zones in this place here. As you can see, we have two neckline in this place here, serving as our support or resistance. Anyone, you see this number one because the price keep hitting this particular place and keep moving. So, when you are expected to enter, if you form this triangle like this, when you are expected to enter, you have to wait for it to break out this triangle because normally, if it breaks out this triangle, that's when movement will start going in other direction. You understand what I'm trying to say? You have to wait for it to break this triangle. If the price breaks out of the because you already even if in your trading view there's one what's it called features there that will give you, let me see, an opportunity to draw triangle. If you just bring it out there, let me see, guys, we'll do introduction to trading view. I will explain that with you. We'll do introduction to trading view. I will explain that there. So whenever the price breaks out, you know what I'm trying to say? Whenever the price breaks out, let me cancel all this. Whenever the price break out your neckline, you shouldn't enter at that particular moment. That's what they're trying to say here. You see, this particular, what's it called, price break out here, and the actors don't buy here. Why did they say that we should not buy here? We have to wait for a retest. This retest is very, very important in trading. If you don't know, this retest is very, very important in trading. So we have to wait for a retest before we enter. You know what I'm trying to say? So you see, this is what they're trying to say. You see, when the price break out, then the price now start coming down. This coming down small is what we call the test. If this can retest and start moving up again, that means we have confirmed this is going on an uptrend. That's when we set our buying, we set our limit here, we set our buying price at this place here, this particular place. That's what we set it because it have already retest and it has given us a good confirmation that yeah, this particular strategy works out. You know what I'm trying to say? And this is what they're trying to see. They say buy on next candle. You see? They say you should buy on next candle. This is the retesting here. Then you start moving here. At least one, two. If it's from one, two, or three candle, then you buy on the next candle. And if you want to set your stop loss, set your stop loss below this because if you can start coming down and break through this leg line, it must start going down. So if you want to set your stop loss, set stop loss here. Or set your target in this something place like this. Just do it 1:3. Do your calculation. Don't always set your target high, high. Maybe you do it 1:10. No, always do it 1:3. If you're setting up stop loss here small, then do the calculation times 3 of the stop loss. That's when you set your target. As simple as that. You understand what I'm trying to say? So now let's continue reading what they are trying to say here. They say now, let's continue from here. They say now we have to wait for the break of the neckline by forming a neckline in such a pattern. That's it. When the price break its previous high, then we can buy. You understand what I'm trying to say? That's why whenever the price break the neckline, then there is no immediate buy. I keep explaining this. If it breaks out any line, any neckline, don't immediately enter. Wait for a retest. The retest is just like a confirmation. You understand what I'm trying to say? You don't immediate buy. Here we have to wait for a retest. When price retest and price form a bullish candle, you see, if it retest and form a bullish candle, if let me say something retest and did not form and start going, keep going down, you don't enter that particular area because that trade might keep going down. But if it retest and start forming a bullish candlestick, then we can buy. You see, that's why I like this book. They explain things bit by bit. Let's say as we know that after the test we need a bullish candle. After that we can buy. After the retest we need a bullish candle to confirm yeah this particular trade is going this way. Then we can now set our entry in that particular place and set our stop loss. You see this how this amazing what's it called? This strategy is. You see the differences between this strategy and other strategies. You see, this one is not in the triangle form, as you can see, and this one is in the triangle form. You have to break out that triangle. You know what I'm trying to say? And wait for a retest before you enter. So that's it. So now let's move on to our third trading strategy. They say we have our third trading strategy. See, in this chart, we can see a pattern which we also call a continuous wedge pattern. They say in this pattern we can find a downside movement Now we have to understand here where we have to enter here and where to keep the target. You see, sometimes we make this mistake as soon as the neckline break. I keep explaining that we sell in there. We don't have to do this because sometimes the price break the neckline and keep moving up. You see, that's what I keep explaining. So we have to wait for the previous low to break in such a situation. We have to enter the trade when the previous low is broken. You understand what I'm trying to say? So now let me explain what they are trying to say here. In this case here, we have something like three different cases here. And you have to work with, let me say, three different things. Number one, neckline. Number two, previous low. Number three, retest. You have to work with three good things. This time it's not only about what's it called? Uh it's not only about breaking of neckline and the retest. No, you have to work with the previous low, which I've already explained that to you guys. So sorry, okay. So now, like I said earlier, if you're talking about this strategy, you're not only talking about the two things like the previous one, which was the like breaking out of the neckline then retest. If you're talking about this thing, what considering, let me see, three things: breaking the neckline, a retest, and breaking the previous low, which I've already explained that in our trend. You're supposed to know what is previous low, higher low, and higher, what's it called, high. You're supposed to know that by now, okay? So now, let's, where did we use to, okay? You see here, we can see that the price has broken its previous low. This means we have got the confirmation and we have to go for a sell order. That's why I said that's what we call confirmation in our trade. Okay, there are some things you need to see before you confirm that this particular time I'm supposed to enter my trade. That's what we call confirmation, which I've already explained that. So now let's check out what they're trying to say. Let's check out what they're trying to see. You see, number one here, you draw all your lines. That's number one. You draw all your necklines, showing, let me say, the support and resistance place. So whenever it breaks down, because what they said was it called this strategy is they say we should always, mostly we should go for the, what's it called, down, what's it called, movement. They say we should go for the down movement. We should always go for the buying, for the selling, sorry. So now they say if it breaks the neckline, we should not enter yet. That's number one. They say we should not enter yet. And number two, they don't say we should wait until it, what's it called, we see a retest. No, it must break the previous low. And if you can see here, the previous low was this line, this dot here, this place here. Let me use, what's it called, arrow. The previous low, this was the previous low. You know what I'm trying to say? This particular price here, sorry, this particular price here must break through. If you draw a straight line here like this, it must break through this particular point first. If it breaks through a particular point, then you now wait for a retest. You see, we're doing three things here: waiting for it to break the neckline, waiting for it to break the previous low. Just, it's something like what I say. Don't, what's it called, be in a hurry to enter a particular trade. That's why fear of missing out. That's why I first explained that fear of missing out. Calm down for all these signs, for all the confirmation. You have to see all the confirmation before you enter a particular trade. Don't just see maybe this particular trade just break out. You see, kind, maybe this thing is going on this way because from this strategy, let me just enter. No, you have to wait for it to break the previous low. Then after breaking the previous low, you have to wait for a confirmation. That's what I'm trying to say. So let me show you the picture of what they are trying to say here. You see, this is the picture of what they are trying to say, which I've already explained. You see, the first one here is it breaks the neckline. That's number one. Then the second one, you see, you have to wait for it to break. So you have to draw a straight line indicating when it breaks that straight line, that means it has break our previous low, which is this. Then for after that, you have to wait from the straight line you draw in this place here. You have to wait for it to retest. If you retest, then this, you see this closer. If you retest and start giving something like a what's it called, bearish movement, you now start seeing red candles like 2 to 3. You now set your entry at that particular place here. That's what they're trying to see. As simple as that. You see, that's why I say don't be in a hurry. Don't just wait. Let me see after it retest it, after it hit this line, and I say, yeah, let me enter. No, you have to wait for it to form something like a bearish movement. You have to see 2 to 3 candles before you set your entry in that particular place. Don't be in a hurry to enter a particular trade, and that's what I keep saying. If you don't want to miss out, or maybe if you don't want to keep looking at the chart for it to go to that place, I think in every trading view, there are prices in this particular side, your right hand side, there are prices there. That's what I'm trying to say. There are prices on that particular side. Then what you just need to do is, in these prices here, just check for any price closer to this place here like this. You copy it as what we call price alert. You go and say, I'll do introduction to what's it called. You check your price alert. You just set it there. If the price is to particular, it will alert you even if you are not in your trading view. It will alert you as far as your data is on. To just alert you, it reaches particular place, you now say, okay, yeah, it's your particular time to enter. Or if you don't even want to set a price alert, just set your entry in this particular place. Immediately if the price hit that particular place, to automatically open without even you there. Then the trade will now start going. Then you do your ratio 1, ratio 3. When setting your this thing, stop loss will be 1. Take target, let me see, take profit should be what? 3. So I hope you understand this now. So that's it for this. So I think we'll stop here for today. We'll continue the rest of the strategy. We have how many strategy left? We have 4. We have 1, 2, 3, 4. We have 4 strategies left before we move to chart patterns. Then this we explain this in our next class. Thank you.